What's up? Thank you for coming back. It is Sunday the 9th of August in 2020. So we saw the markets kind of close mixed for Friday. The Dow and S&P were slightly up, and the Nasdaq closed down. Nasdaq, by the way, hitting all-time highs. As we know, they are somewhat tech heavy, and we have Apple, Facebook, Google, Microsoft sort of carrying them on their shoulders. Some of the headlines for the week, we have the dollar index hitting 2 year lows as there's lots of turmoil and tension in markets, especially internationally. And the dollar just has been losing its strength while the markets have been hitting all time highs, Nasdaq specifically. We have gold breaching the $2,000 per ounce mark for the first time ever. Yeah, here you can see back in 2019 where it was hovering in the 1300s, went up to 1500, and then just this year it's been spiking ever since COVID. And it's well above $2,000 an ounce. Could be a safe haven as it's accepted globally. And the supply is limited. So, and then of course, the behemoth, the global giant, Apple, is getting very close to the $2 trillion valuation, which is unreal because I remember, what is it, 2 or maybe 3 years ago where they just reached the 1 trillion and that was such a huge deal. But they've now surpassed Saudi Aramco as the most valuable company in the entire world. So props to Tim Cook and his team for doing just incredible things over there after taking over the never to be forgotten Steve Jobs' tremendous company. Also, we saw rocket companies IPO this week at around $18 a share, and they closed Friday at around, I want to say, $23 to $24 range. So they had a nice first week on the exchange. Decent company. I think it'll be interesting to see how they perform in the coming years. And their CEO said that they're actually more of a technology-based company. And we saw more tensions with China as Trump signed some executive orders issuing a ban on transactions with WeChat. So they're just going back and forth. This could also affect some Chinese ADRs that are sold here in America, as we saw some prices drop on those well-known Chinese-based companies. And Bitcoin breached the $12,000 mark earlier this week, a couple times actually, and it was the first time in a couple years. And if you go back all the way years ago, prior to a couple years ago, when it breached to $12,000, that was the first time that it's done since it had that huge jump back in 2017 where it reached all-time high of around 20 grand per coin. So people are almost taking Bitcoin as a somewhat safe haven as we're seeing the dollar collapse on a yearly price range, because we know that it's not necessarily fully government controlled and regulated, and it has more openness and capabilities for people that don't have access to financial institutions as the majority of Americans do. And of course, hundreds of companies, pharmaceuticals, are all fighting neck and neck and putting their all full 110% efforts into trying to find a cure for the COVID virus that has affected the entire world. We have seen global powerhouse Pfizer and Gilead reach a deal to be able to disperse their remdesivir drug. But word is that it's going to be very expensive, and then it'll take multiple doses just to see full results. So we're going to do another 100% randomized stock pick. These are always so fun because I don't know which one I'm going to get. Today we have NVIDIA. NVIDIA. It's an American multinational tech company. Their focus is on semiconductors, specifically GPUs or graphics processing units for gaming and professional markets. They also do system on a chip for mobile computing and automotive markets, and they have a really interesting focus on AI. They were incorporated in Delaware, obviously for tax benefits, and based in Santa Clara, California, along with all of the other Silicon Valley tech firms. They were co-founded in the early 90s by three tech-savvy entrepreneurs, one of them being the current CEO Jensen Huang. They started the company with only $40,000 amongst the three of them, received a $20 million funding from Sequoia Capital. Interesting how they got their name. NVIDIA is actually the Latin word for envy, and they went public in 1999, right before the tech bubble. Some of their major products include the GeForce series GPUs, which gamers praise. And the notable acquisition, they recently acquired Mellanox Technologies based out of Israel for $6.9 billion, which will allow them to enter the high performance computing market. And they actually had competing offers to buy out this company. They have been involved in some lawsuits in the past, one being false advertising. Here's the family of their main products. One quick thing I wanted to note, and that's that I don't necessarily do a bunch of research on these companies prior to analyzing them. All I do is just pull up the stock ticker on all of these resources and websites, and we're pretty much just seeing them for the first time together, as I thought it'd be more down to earth and spontaneous as we're seeing the numbers and data for the first time together. So here's their website. Also, to note, if you go to Mellanox's website, which, as I mentioned, that $7 billion acquisition they got last year, it just brings you directly to NVIDIA.com. But it's a pretty interesting website to browse. If you're a fan of gaming and graphics cards, you can check out their shop. Here's some of their main businesses that they're involved in. One of the most promising ones, which I believe will be huge in the future, is autonomous driving, which they do have lots of major global partners in this industry, and they're working on the chips. So you can see the NVIDIA Drive AGN Orin. Here you can see 370 plus NVIDIA Drive partners, some notable big names. I'll just scroll through this as you can browse. Obviously, some Fortune 100 and some of the largest companies in the world on this list, even universities for research. So let's check out the rankings and ratings from technology websites. on how they grade NVIDIA's graphics cards. Here's Tom's Hardware, and this is actually from 9 days ago. This article was posted. So it's very recent. Here's the best graphics shortlist. RTX models are all NVIDIA. You can see the frame rate, performance are in the top 3, and then RX is an AMD modeled chip, and then the GTX, which actually they give the number 1 for value, number 2 going to the AMD RX, and then number 3 is the other NVIDIA product. And then the best graphics card for gaming this year is, of course, NVIDIA RTX 2080 Ti. And it actually has 4K capabilities. Here's some of all the specs. And it actually has negatives on it, but they still give it the best rating. And it's well over $1,000 for the chip. Number 2 is also NVIDIA, and then 3 they give to AMD's RX, who by the way is NVIDIA's biggest competitor. And then here's PC Gamer website. This is a very recent article as well. And they also say the NVIDIA GeForce RTX 2080 is the number 1 best graphics card of the year. And then you have the 2080. NVIDIA is they're just dominating the competition in terms of performance on their graphics cards as of now, with their main competitor AMD vying to take that number 1 spot.
Say what? I'm coming for that number 1 spot.
I always find it interesting to check out companies' IP or intellectual property. We can just browse over real quick. Applicant name, NVIDIA, a very rare name that I doubt anyone is even vying to take other than them. Regardless, here we can see well over 1,000, and I'm sure that's not even all of the available patents that they're involved in. Here's an adaptive shading, which I'm sure is some sort of gaming related patent that they have working on. Just browse over this real quick. Here, if you're computer or tech savvy, that you may find this interesting. Here we'll check out sec.gov, EDGAR, where all the companies are required to report all of their financial and corporate actions so that it can be publicly documented. We'll just briefly check out a couple documents. Here you can see the revenue for, this is quarter ending in April 26th of this year. Vastly up compared to a year ago, as well as the gross profit and net income was nearly tripled. You can see their balance sheet, cash and cash equivalents. They added almost $5,000 on the table. Total current assets were way up. Liabilities almost doubled, and liabilities and shareholders' equity as well was up. And then we'll look at cash flow. Obviously the net income was positive. Overall change in cash and cash equivalents was up by about $2.5 billion. One thing I want to note, if you have a computer that implements an NVIDIA based graphics chip, you get this cool little NVIDIA control panel where you can, update your settings, whether it be display, video, etc. We're here on Yahoo Finance. You can see Friday they closed at 447.98, down 1.2%. They're trading near their 52-week high. Looks like they bottomed out right around the COVID time, at least on a year-to-date range. Earnings per share, very solid $5.35 a share annualized, which is very impressive for such an expensive company. Their beta, they're a bit more volatile on the market. Market capitalization of $276 billion. They do pay a small dividend of 0.64 cents a share. Ex-dividend was back in June, which means there should be one July, August, early next month. So it could be a good time to get in if you are targeting dividends specifically and aren't worried about risk, etc. Target estimate is slightly down as they are pretty expensive, so when your target estimates typically will be much lower when a company is priced this high. Volume of 8 million, so they're getting several $1 billion of shares traded daily. Check out their chart. Long term, dating back till 1999 when they IPO'd. Very nice dollar and change. And then they closed the year at around almost $4. But if you were able to get in 2 decades ago at even around $2 per share, if you said that you buy 500 shares at $2 a share, that'd be obviously about $1,000. So if you still do those 500 shares today at $447.98, that $1,000 2 decades ago and 1 year would be now worth $223,000, and then add an extra 998 plus all these dividends, which has been increasing yearly, but not so much the past year, it looks like. And they even did a stock split back in 06, 3 for 2, and then actually they did 2 stock splits within 2-year time frame. But as you can see, it looks like they spiked. They had a huge run from 2016 all the way until 2018, and then they plummeted back when all the stocks went down in the fourth quarter of 2018, and then they've since recovered and are now at all-time highs. Really impressive long-time buy if you were holding this stock decades ago. So you can see their market cap, unlike many other companies, as of recent has actually improved over the prior quarters, as well as their enterprise value. Price to book is really high, but that's typical for almost every tech-based company. Profit margins are just beautiful, almost 30%. Really good margins. Really solid revenue growth on the quarter. Earnings through the roof, more than doubled year over year. They have $16 billion in cash, $8 billion in debt. Book value per share is $21, and then operating cash flow is almost $5 billion. You can see 4% held by insiders. So the insiders definitely have belief in the company, and they are a global leader, and seems in GPUs. Vastly outperform the S&P. Unreal. You might as well just buy and hold this company. 200% in the past 52 weeks. As you can see, the measly 15% compared to NVIDIA. So they have almost 14,000 employees. Here's the co-founder and CEO, Huang. Makes about $2 million a year. Here's some annual financials on their income statement. So their total rev was actually down year over year, but has been up if you were to look on a long-term range. Cost of revenue went down as well. Operating expenses were up. So they're spending a lot more on research and development. SGA, it could just be raises. And their net income as their EPS was 4.5, which again, really good number for such an expensive stock. Quarterly, we can see rev was slightly down quarter over quarter. Actually, the lowest it's been since 3 quarters ago. Cost of rev was down. Net income almost $1 billion. Doesn't seem like they've ever had $1 billion net income on a quarter. So it'll be very interesting, and I'm sure they'll make a big deal out of it whenever they finally breach the $1 billion net income in one quarter. Which, as we know, the gaming industry is vastly growing as of recent, especially now that we have esports and several other industries and sectors getting involved in the gaming industry. So I definitely expect them to bring in $1 billion net income very soon. If not this year, then definitely next year. I would bet on it. Here's their balance sheet. You can see $17 billion, which has grown very impressively year over year, as well as quarterly. Tangible book value has grown as well, and their cash flow annually has grown from operating activities, from investing. Here we can see it was down $4 billion, which I'm assuming is when they acquired Mellanox for $6.9 billion. Free cash flow, this is showing last year fiscal year was $4.2 billion. Always like these little charts. Here's one of my new favorite sites to do some stock analysis, Guru Focus. So if you do markets and then industry overview, went to technology, and we're looking at semiconductor industry right now. NVIDIA, followed by Broadcom, Texas Instruments, who makes cool calculators similar to this. And Qualcomm and AMD, who's been vastly on the rise in the past few decades, specifically since they hired Lisa Su at the helm. And let's just sort by price to book ratio. As you can see, a lot of these big tech companies have high price to book ratios simply because they're technology based, which a lot of investors assume are growth based companies. Dividend yield. Here is NVIDIA all the way at the bottom. So they actually are kind of holding on to a lot of their own net income, despite the fact that they are the leader in United States in GPUs. But they do spend a lot on R&D, so I am looking at a dividend increase in the coming future, especially with the rise of gaming globally. Check out margins. We'll do net margins. NVIDIA in the top 5 in terms of net margins, behind some of their competitors at 28%, which is very impressive. So you'd wonder why their dividend is so low. So I would definitely expect to see them raise it in the near future. And I'm not going to spend too much time on this page, but it's a lot of really cool and beautiful graphics. If you want to analyze any of this data, feel free to pause the screen and check out all of this data. Financials, as you can see, back in 2009, they actually were losing money over a decade ago, and then they just started getting profitable, adding employees. And here you can see cash has grown vastly on a yearly basis. Their debt has sort of grown and steadied off in the past few years. Operating free cash flow has grown very impressively every year almost. in the past decade, as well as the price per share has been up hugely in the past 2 decades. Some headlines and some big investors making transactions recently. Ken Fisher, well-known investor, Greenblatt, Gabelli, looks like mostly adding in buys, percentage-wise. And they're all up. Everyone that bought, they're all up. So smart buys on their part. Here's a pretty cool comparison with their peers or competitors. They're most valuable out of AMD, Intel, and Micron Technology. Intel has over 100,000 employees, wow. And yet they're not worth as much as NVIDIA in market cap or enterprise value. But here we can see price versus 52-week low. They're all up. Intel specifically has a very low beta, so they're not very volatile. And they've been around for a real long time, so they won't be moving as much as these other tech-based companies. But it looks like NVIDIA is way up compared to these peers from their 52-week low. Price to sales is the best compared to these peers. Price to book, one of the higher ones, as we've seen already. So they're definitely high priced, and looks like there's plenty of reasons, valid reasons as to why, but also questionable price range that they're at right now. Solid revenue growth, as looks like most of these semiconductor based companies do have, other than Micron. I know Micron's fairly cheap right now compared to these other companies in terms of historical price. Let's see, net income 3-year behind Intel. Net income, earnings per share growth is down compared to AMD, who's actually been on a huge tear this past year or so. Profit margins well above these peers. Net income margin comparable to that of Intel. One very underrated data that I really like to look at is financials based on employees. So this will be interesting to see. So rev per employee, NVIDIA is number one out of these peers. Then net income per employee, 240,000 net income per employee, and you know they don't average that much pay per employee aside from the executives. So that's a really huge number.
Huge amount of money.
NVIDIA and AMD are the only companies who have been positive on pretty much every single time frame you can look at. And of course the unreal 4,000+% ROI in 10 years. Even more unreal in a 2-decade range. And them as well as Intel pay dividends. Intel pays higher. So I guess it's a good thing and a blessing and a curse, since they pay such small dividends, because it almost validates their high stock price. You can see the balance sheet behind Intel, but again, Intel's been around for such a long time. I'm a huge fan of Zach's for this page that they update, not on every company, but I'm grateful for the ones that they do show. It's the key company metrics. We'll look at quarterly, where you can see it breaks down each individual sector that the company is involved in and how much revenue they brought in. Their gaming sector is their leader in terms of revenue every single quarter, looks like, except behind GPUs, which brings in about $3 billion a quarter as of recent. And then you can see their data center, auto, which I definitely see to be a growing sector or industry in the coming years. Professional visualization. This company is definitely built into the future. They're making very good choices on what segments and what industries to get involved in. So props to the management team there. You can see gaming number one behind GPU, who's actually number one. But GPU is sort of technically gaming. So here on MSN Money, looked up NVIDIA and go to analysis, management effectiveness, and we'll see the number we already saw, the income per employee, which was through the roof. But it gives you a good comparison to show you that they're quadruple that of the industry. As well as you can see the inventory turnover, not as good as the entire industry though. But it doesn't matter when you're making 200 plus K income per employee. Here on one of my favorite screening websites, FinViz, Financial Visualizations. You can see a beautiful chart with candlesticks. Of course, showing all the fun fundamentals and technicals. Simple movie average, they're 56% in 200 days. Earnings per share, look at this number, that's unbelievable. $9.9 a share on the year. Wow. This year though is slowing. Looks like next year though, 21% up on EPS. Next 5 years, 16%. People are expecting growth in this company. And of course, they're in a growing industry, so I only see positive things coming from this company. And as of recent, in the past month or so, there's been outperforms, upgrades, so analysts feel the same way as well. Only Morgan Stanley showing a downgrade in the past several months. There's a lone hater. Some news if you want to breeze through these and pause. Some insider trading in the past year. Looks like all sales do not necessarily mean a bad thing, because insider sales could be for various reasons, personal or anything. Could be option exercises, which are forced sometimes. But it's unreal that all these insider moves, and it's such large numbers, because I'm so used to seeing insider moves and even big companies where it's just 100,000 or tens of thousands. This is millions of dollars in almost every single transaction. Not even seeing a buy as far back as last year, at least on FinViz. We are here on TipRanks, another great site for analysis. You can't see it, but up here it shows they have 30,000 people following on this website. Really good smart score, because you don't typically see that with high price stocks. Looks like mostly positive feedback, aside from hedge funds, which are down 1 million shares in the past quarter, and insiders as well. But then again, insiders are just banking off of the all-time highs price, so I'm sure they're glad to cash out.
Boy, you know I'm cashing out.
Just nothing but sells. Here's some buys the past few months from directors. Other than that, mostly all sells, and these were uninformative buys. And here's another buy by the CAO. We'll check out hedge funds. You can see this adds and reduced. We'll just look at the 5-star, or Greenblatt's 4.5. He added 184%. Robertson added 100%. Then we have these 5 stars, which reduce. As you can see, they're not fully liquidating their positions, as they're only reducing by about half, other than Chilton. Here we'll check out NVIDIA's social media presence, specifically on Twitter. And over here you'll see Nita, NVIDIA's senior manager at autonomous vehicles, talking about the AI and self-driving capabilities thanks to NVIDIA and their autonomous vehicle segment. So we can see NVIDIA, they have a blog. I haven't checked it out, but I'm sure it'd be interesting to read. As you can see, they're definitely huge fans of the color green, as we've seen NVIDIA is Latin for envy. 1.5 million followers. They're actually following a lot of people, so that's pretty cool. Looks like they're promoting their AI. They tweet almost every other day, more or less. Fast Company, great magazine. I'd recommend reading it or getting a subscription. More AI promotion. They're getting some decent engagement as well. And looks like some graphics that are using the Unreal Engine, one of the most powerful engines in the gaming market. And University of Florida, wow, $70 million AI partnership with NVIDIA, so that's a pretty big deal. We'll check out some of their competitors. Advanced Micro Devices, who has not nearly as many followers, but they are a newer company. Here's Lisa Su, their CEO. AMD is actually getting really good engagement on their posts. So, the one thing about these tech-driven companies is that they do know how to talk to their millennials and younger generations. So it's for all these industrials and energy-based and companies that have been around for a century or several decades, they can learn a thing or two from these technology-based companies who know how to relate to and converse with their customers and future clientele. So here's Intel. Looks like they top both companies combined in followers, following about the same amount as NVIDIA. You can see they're also investing heavily in the gaming sector, as gaming is vastly on the rise in the past few years, and I do expect it to be in the coming years as well, as it's even a sport and people can make a living for real gaming. They actually recently reported second quarter results a couple weeks back. You can see $19.5 billion record revenue in Q2. So that's very impressive for Intel. And then I wanted to, here's Mellanox's profile, the company that they actually acquired last year, based out of Israel. You can see Ethernet interconnected solutions and services for servers and storage. So it's a very good partnership for the long term, it looks like, for NVIDIA. Here's a really cool research source I recently found, craft.co. We can just check out Mellanox Technologies real quick. I just wanted to show the impact that they will have on NVIDIA for years to come. So you can see they're bringing in nearly $1 billion top line, and they're profitable, netting several hundred million a year. So Seems as though NVIDIA got a really good deal out of Mellanox, and it's looking like it'll pay off in the long term. In more recent M&A news, this is economist.com. It's looking like NVIDIA has shared interest in acquiring ARM, which is based in Britain, and they produce fundamental blueprints or designs for computer chips called instruction set architectures, ISAS, and it was once bought by SoftBank for $32 billion several years back. So if they do acquire them, it could be a very large acquisition, most likely being well over $40 billion, which will make NVIDIA just that much stronger. One thing I wanted to point out real quick is that NVIDIA actually reports their earnings on August 19th, so on a Wednesday, a week and a half from today. It'll be very interesting to see if they can breach that $1 billion net income for the quarter. Be looking forward to that, and definitely mark it on my calendar, as well as I'd recommend you do the same. So now we're going to get to the final ranking on the tier list for NVIDIA. One thing to note, making these videos is very enjoyable for me, as I really enjoy researching these companies, how they're founded, their data, finding all these really cool resources. But it does take a bit of time, and I like to spend more time analyzing industries and a wide range of companies, as opposed to putting so many hours into making a video for just one company. So I'll probably just shift to doing a video every 2 or maybe 3 weeks. But thank you to everyone that's watched these. If you have any feedback, please leave it in the comments. I'm welcoming and accepting of any logical and legitimate thoughts that you all have. NVIDIA seems like a company is built for the future. They're in a very, very well placed industry, as we know their focus is graphics chips, and we know that when people game, which is what this company's main focus is, they want the graphics quality to be top notch. And I'm sure that a lot of gamers will place graphics as one of the main reasons as to why they'll buy games in the first place. And we know that some of the main console makers, Xbox, made by Microsoft, and then Sony, who makes the PlayStation, are actually come out with next-gen consoles fairly soon. And I'm sure NVIDIA will have their eyes, literally, as that's their logo, on those next-gen consoles. Regardless, they still are investing heavily in AI, which is another growing industry, as well as autonomous and self-driving cars, which will be more and more prominent in the future. They're involved now in data centers thanks to Mellanox, and if they acquire ARM, that could be huge for them, making them even more valuable. The management's just making incredible decisions. As you can see, their co-founder is still at the helm after 20 plus years at the company. Although they are near an all-time high, they still have room to grow. Their dividend is fairly low, so I would like to see them raise their dividend pretty soon. And it would be very cool to see them breach that $1 billion of net income on the 19th when they report their earnings. So it's a very cool and interesting company to research. I enjoyed it vastly. I'll place them actually here. really great company, just all around. They're future and forward looking. They bring in solid revenue and bottom line net income. They even throw in a little dividend. I would not recommend buying them now, as they are so heavily priced. I'd wait for a drop. But long term could be a great hold if they do drop this year. Because as we saw, if you bought them back when they IPO'd, you're up several thousands of percent. But all around, incredible company. I really like how they're investing in the future of the world, really, and where society is heading towards. They have some really great partnerships as well, especially in the auto industry. And one thing I didn't even mention, but they have been recognized and ranked as one of the top places to work. And they are fans of women in the workplace. So they are backing that whole outlook on the corporate world. But I really like this company on so many levels. Only downside is that could be somewhat pricey if you don't want to put too much in their company. And since they are a growth and technology based company, it could tend to be volatile, so there could be some spikes for the upside or downside. But regardless, no question, they definitely deserve to be in, at worst, the B tier, at least now in 2020. And I definitely would hold this company for long term, regardless of drops, and potentially even add more shares and drops. But thanks so much for watching. Have a great week or so. Life is good. Peace.